Welcome to Trends with Benefits, a podcast by VanEck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to another episode of Trends with Benefits. Again, this is another special edition Bitcoin episode of Trends with Benefits, where we try to explain Bitcoin in a no jargon way. If you've been paying attention to the news over the last year, over the last few months even, you've probably been hearing more about the growing institutional adoption of Bitcoin. Certainly some high-profile fund managers and companies adding Bitcoin or adding exposure to Bitcoin. So as part of our special Bitcoin series, we wanted to explore the investment case of Bitcoin for institutions. We think this certainly should be informative for individual investors as well to see how these sophisticated investors are approaching that decision and coming to terms and making those investments. And one of the best people to help me explore this topic is Dan Tapiero, CEO and managing partner of 10T Holdings and co-founder of Gold Bullion International. Dan, thanks for joining me today.
No, my pleasure. My pleasure.
One of the first things I wanted to just kind of get into is what you guys are working on, what you're working on with 10T, particularly in the crypto space.
Sure. 10T is a private equity fund that is explicitly focused on mid to late stage companies that are growing up in the digital asset ecosystem. So growing up with the adoption of Bitcoin, cryptocurrency, and what's called blockchain technology. We just launched a few weeks ago. We spent a year in the process, again, a little delayed by COVID, but interest has picked up dramatically in the last few months, of course. What we're doing is building a portfolio of what I would call our sort of picks and shovels names, companies that we believe are de-risked, that are larger than $400 million in market valuation. Most of the funds in the space, as you probably know, are venture capital. They're early stage and seed focused, and you have very well-known names. Andreessen, of course, and Polychain and Paradigm, and some of the great technology investors. We cannot compete with them, nor do I have a background or interest. Having been in the global macro hedge fund world for 25 years, and also having started two businesses that were really derived from macro ideas, this is sort of right up my alley. So what we've done is we've taken the world and divided the DAE, the digital asset ecosystem world, and divided into three sectors. One is digital asset ecosystem gateways. The next one is next generation financial services. And the third is blockchain infrastructure. And we've basically chosen 3 to 5 companies in each sector for the portfolio. And behind that, we've already purchased 2 companies. My process has been historically very research intensive. We've written 50-page investment memos that are supporting that is analysis supporting the investments in those companies. And so it's meant to be a diversified portfolio that is going to benefit from what I call the macro wind at your back. And that is just simply the growth that we expect to happen in this digital asset ecosystem. Last thing I'll say is that one of the things that we say often is that it's really like we think 1995 or 96 in terms of the timing of the adoption of the internet. And why do we say that? We say that because in 95, 96, 1% of the world had access to the internet. And today about a little more than 1% of the world have crypto wallets or crypto accounts. And so we look at the next 10 years in terms of the adoption of the internet, and that increased by a factor of 15. And so we think the digital asset ecosystem, which is actually growing faster at the moment, but we think even if we're half right about it and it's not 15x, even if it's 5x or 10x, we think the companies that we have in the portfolio are going to benefit over that 10-year period.
I mean, it's interesting that you're investing in equities in this case, I guess later stage, but still private companies playing in what you call the digital asset ecosystem. Do you think that people are aware that there's this ecosystem out there, that there's something to tap into?
Well, they certainly are after they speak to us for an hour. But what I would say is, look, this is a very big world. You have the world of DeFi that has exploded, decentralized finance. Stable coins have now I think become a lot more popular because people realize that they can actually earn yield in this digital world. You've got, of course, all the different cryptocurrencies. You have probably 60 or 70 different cryptos that are now worth over $1 billion in market valuation. I mean, that wasn't the case even 3 or 4 months ago. So it's a very big world. And what I've done is, I've carved out a piece of that. We're the first fund in the world that I'm aware of to focus just on these mid to late stage companies. And we're doing that because I think this ecosystem is actually more developed than I would say is generally perceived. And when you dig a little deeper, you see that there are probably over 40 companies that have a valuation over 400 million. And, that's a number where, I chose that number. It's not really arbitrary, but I chose it because I think that's the point at which your business is reaching escape velocity. You've built your business, you have 30, 40, $50 million in revenues. You have a vision, you have a team, you have a track record. It's not two guys in a garage tinkering, coming up with like the next new cool protocol. And that new cool protocol maybe has the chance for, to go up 1,000x. And our investments, I think, not 1,000x, but I think, definitely have the ability to go up multifold. So look, it's a very big world. I don't think the world generally is aware of all the activity. There's also a high bar, sort of a high barrier to entry in terms of the knowledge that you need to have for this to make sense to you. So you really got to put in the time and do the work. But once you do, it's very rewarding.
How much has Bitcoin influenced the development of that ecosystem?
Oh, well, look, I mean, Bitcoin is now $1 trillion asset. I think nothing exists without Bitcoin. I think Bitcoin is essential. I mean, I think of it really in terms of almost the new, and Raoul Pal likes to call it the pristine collateral of the evolving system. So it's the AAA high quality collateral that's going to underline the system and everything. It's almost like in the old world, the legacy world, you have treasuries and then you have lots of other bonds that are spread to treasuries, right? It's sort of everything beyond Bitcoin is a higher degree of risk. So that's the anchor, in my view, for the entire system.
So when did you first learn about Bitcoin and have that aha moment? I mean, were you ever skeptical of it in the early days?
Yeah, I mean, look, my gold company, GBI, integrated with a firm called BitReserve, which today is the Uphold wallet, in 2014. And as far as I know, we were the first place in the world where you could buy and sell physical gold to buy and sell Bitcoin or Ripple. That was my introduction. We had some young guys at the firm who were really into it, who were plugged in. They kind of pulled me in and, I was active there a little bit, but I didn't quite get it. It was very small still. So as a macro portfolio manager all these years, it wasn't quite that interesting. It was small, but I was introduced to it, but I didn't really understand it. And it really wasn't until 4 or 5 years later at the Q4 18, Q1 19 that I really got sucked into it because, we had to move up to 20,000 into early 18 and then Bitcoin sold off 80%. I thought, okay, I missed or broadly missed a lot of it into 17. I didn't have the correct position size. As a macro investor, that after huge moves, when you get an 85% correction, it's either going to zero or it's a massive buying opportunity. So I started buying in my own entity, DTAP Capital, and I basically bought from 4,000 all the way up to 10. And I just sort of bought all the way up and actually have not done anything since then. I think that it's crazy. If you're not doing this 24/7, it's very difficult to trade Bitcoin. So I'm not trading day to day as people are in the space. But it was at that time I put the position on, and then I really started to think, and as you as you add to your position, you get more and more interested in it. As it works, you get even more interested in it. And I just kept reading, and I spent 6 months, probably 10 hours a day, reading, listening to, at least 100 podcasts. I mean, just trying to take it all in. And then I had an epiphany that, boy, was I stupid back in 2014. I didn't really understand what Bitcoin was. And Bitcoin really is an invention akin to the invention of the combustion engine or akin to the discovery of electricity. And so it's something massive like that And, why do I say that just briefly is because, the Satoshi white paper that was published in '08, very difficult for people to understand, myself included. But that paper solved a math problem that had gone unsolved for many, many years called the Byzantine generals problem. And that was the problem of distributed trust. How do two counterparties trust each other or send value to each other without an intermediary? Again, I hadn't realized that this was a problem that the cryptographic and scientific community, mathematical community, had tried to solve for years and years and had not. And this paper, which explains the functioning of the Bitcoin network, how the Bitcoin mechanism works. And when I mean by Bitcoin mechanism, I mean Bitcoin capital B, the network, which is powered by the blockchain technology, I would say, underneath it. And then you have Bitcoin little b, the cryptocurrency, which is the incentive mechanism for the node operators to verify the transactions. And so that whole thing is very complex, and how that machine works is explained in that 8-page paper. And I just thought to myself, oh my goodness, the value of this, the first sort of truly decentralized platform of value that has a security apparatus in a way that is impregnable. Like, what is that worth, right? Bitcoin network cannot be hacked, and that would take hours to get into, and there's plenty of research on that. But I just thought to myself, my goodness, this thing is worth trillions and trillions of dollars. And it was at that moment, Bitcoin was maybe worth 200-300 billion. And I've been saying publicly for, 18 months more that we probably can go up to 300,000-500,000 in price over the next 5-6 years.
So what's going on now? We're hearing more and more that, institutional investors are adopting Bitcoin. Why are they investing in Bitcoin?
I think that, they see that it's an asset that isn't correlated to any other asset. I think that it's now large enough in a way. I mean, at $200-400 billion of market value, and now $1 trillion, they have enough liquidity in the market to put on a decent sized position. I think also the CME introducing Bitcoin futures and now Ethereum futures for a large part of the institutional, and I include sort of hedge fund world as well, money management world, they can't buy something that isn't deemed a security, right? But they can buy a future on anything. And so I think that's also helped. And you've had some very smart people from the old world. Paul Tudor Jones's piece last summer, I think, was pivotal. He's thinking about Bitcoin as an inflation hedge, but to me, it's more a hedge against the debasement of fiat currency, which is what we talked about before. I don't think he's so focused on what is the value of this tremendous new invention, Bitcoin. But that's okay. I think the way that the framework that he put it into in that 8-page piece, calling Bitcoin the fastest horse, I think that spoke to a lot of institutions. So when you get someone like Paul coming out and writing a piece like that, people take notice.
So you mentioned a few of the things that may have helped institutions start to adopt this more in terms of liquidity and different derivative products that they can actually trade. I know you've spoken with investment committees before to try to help introduce and have them incorporate Bitcoin. Can you shed a little color in terms of what are the different decision points that they're looking at and what got them over the hump in terms of Bitcoin?
Yeah, so I think you're referring to, I chair the investment committee for the endowment of a school. And it's a significant endowment. We have Cambridge Advisors advises us. And basically in Q1 19, I put forth to the committee the idea that we should own some Bitcoin. I had one of the trustee emeriti who's very involved in this world make a presentation, and it was discussed, but it was discussed within the framework of let's put 1% of the endowment into Bitcoin. We made the case for it, and the committee came around and Cambridge signed off on it. But it was, even if you didn't believe in anything about it, we were just going to risk 1%. And that's sort of the thesis that Wences Casares has put forth. And I think he's one of the, when you ask who are the OG crypto guys, he's certainly one of the most important people in the space in terms of getting people to take this toe dip. We laid out the case for Bitcoin. We ended up buying it directly. So we own it. I think we were the first high school in the endowment in the country to actually own Bitcoin directly. I think when you put it in that framework, This is something that could go up 10, 20, 30 times, and your maximum downside is 1%. I think when you think about it that way as an option on not just Bitcoin, but it's always an option on the growth of this entire world. If you believe that we're moving towards even just a more digital world, this was a very simple, easy way for us to get exposure. It's not as difficult as, and it's certainly easier now, and it's not expensive either. It's just that it takes work. You can't just push a button and it appears. It takes a little bit of work, but look, it's been worth it. It's been a nice contributor to the endowment. I think more people will start to think in those terms, more institutions, but I think the number is going to go up. I think instead of 1%, it'll be like 2 or 3%. That really spoke when you can quantify the risk. I think that really speaks to that conservative institutional mindset.
So you take on a little bit, you have the potential for asymmetrical returns, some lower correlation and diversification potential with the rest of the portfolio. And then the story of the potential just future of finance or of the economy. How strong are each of those arguments? Do you think that really grabs people?
Yeah, well, I think that it doesn't have a correlation to other assets. I think that's important. Some people will say, oh, well, if the NASDAQ goes down 30%, will Bitcoin also drop? Yeah, Bitcoin will also drop, but I think of Bitcoin is really doing its own thing. It's the greatest returning asset in the history of the world. It's up 250% annualized for the last 10 years. So that's not cumulative, that's annualized. So no asset has ever had that kind of return profile. And let's say you have a 60-40 traditional portfolio. If you put 5% of that portfolio into Bitcoin 6-7 years ago, the performance of the entire portfolio would have doubled. So you don't need a lot of Bitcoin for it to have impact. I also think one important thing is that now that there's $190 trillion of cash plus bonds out there in the world, and a lot of the government bonds, of course, are yielding 0 or let's just say less than 1%. And at least in my view, I don't think those bonds act as the hedge that they did in years past. So if the equity markets have a little bit of a wobble, or if the economy slows, these portfolios, especially insurance companies that are sitting at 70-30 or 60-40, I think the bond portion of that portfolio is not going to be able to hedge the drop or at least the sideways movement in the equities. And that's the interesting thing. Since 1981, that 60-40 portfolio has been unbelievable, because every time you've had a little wobble, your bonds offset your losses or your reduced gains in the equity portfolio. And now bonds really can't go below 0. And I think people are out there looking for other assets, for alpha out there, and also for other stores of value. I mean, there's no question that owning an asset with a negative real yield doesn't help you. And again, you asked me before about institutional adoption. Massachusetts Mutual purchase of $100 million of Bitcoin in Q4, to me, was the most important single execution of the entire year, because there you have a very conservative insurance company saying, okay, they have 230 billion in assets. Who knows? They probably have 30 to $50 billion of treasuries or bonds, who knows? And they probably are looking for ways to increase yield because they have all these liabilities coming up. So I really think that Bitcoin, and I actually also think gold here too. I think Bitcoin outperforms gold, but I don't think you have anything that's as pure a hedge for a portfolio and is, of course, tremendously liquid. Gold trades $50 trillion a year. Bitcoin probably only 5 to 6 trillion now. So I still think gold has a place in the world, a very important place. And I think institutions, by the way, haven't yet increased their exposure to gold. I do expect there to be a coming wave of institutional adoption. I know that's not the consensus feeling out there. A lot of people think, oh, Bitcoin is replacing gold. I don't see that at all. There's some overlap in their functionality, but really Bitcoin is really something, as I've just discussed before, much bigger than just a hedge in a portfolio.
Yeah, it'll be a different asset class. It already is. How do institutions approach the value or the valuation of Bitcoin?
We look at it from a whole bunch of different perspectives. The one that I like the best, really, to look at how the network, the Bitcoin network, and of course, all the other blockchains as well. There are plenty of other public and private blockchains that have different functionality that, there are trade-offs with many of them. But, this is a whole world that's growing up, and there are already 50, 60 different cryptocurrencies that represent different blockchains out there that have a value over $1 billion. So I think about what is the most decentralized network of value worth, right? If the internet that we use today is for sending information, what is the internet of money worth? It's got to be worth more than the internet itself. So what is the internet itself worth? You can put any number you want on it, but it's probably at least $4 or $5 trillion. And that's a small number because Apple is worth 2 trillion and Amazon's worth $1.5 trillion. Those are just single companies. So that's how I think about it very conservatively. There are people in the space who, think, well, that could be worth 100 trillion. I don't think that's impossible. People think there are people out there who think Bitcoin can get to $1 million. I don't think that's impossible, but I think 300,000-400,000 is sort of my target. That'll be around $5-6 trillion. It'll be established. It'll be known, and then we'll go from there. But I think about it in terms of also how much would it cost to build that network today if you were a single company? And again, I think it's trillions of dollars. I don't think you could. I think it's non-replicatable.
So when an institution adopts Bitcoin, and maybe going back to your experience with a high school foundation, what's next? Where do they go to execute? And do they need to bring on other people to help with trading and compliance, things of that sort?
I think some of the larger firms can help you with that, and I think they're pretty much household names, at least in the space. There's a Coinbase or a Kraken. NYDIG is a new company that specializes in speaking with institutions. I think Scaramucci is out with a product. There are some newcomers that specialize in one-stop shopping or full service for institutions. You want to pick people who you're comfortable with. You want to decide how you want to hold it. Or maybe, look, you're an endowment and you have a brokerage account. You just want to buy it in the futures. I mean, there's nothing wrong with that, except if you're going to watch it every day, I would suggest not watching it every day. The volatility is crazy still.
I was wondering how much infrastructure was playing a role in the institutional adoption of Bitcoin. I mean, would they be better off, just buying the futures or derivatives than trying to play the spot?
It depends why they're buying it. It depends what the purpose is. Look, I think both are fine. I think both are fine. Some people want to own the Bitcoin and want it in cold storage. That's taken off exchange and held on your own thumb drive. So yes, I would say that the build out of some of the infrastructure, the PayPal launch, I think is very important. You can buy Bitcoin and Ethereum in your PayPal account. 340 million people from one day to the next have the ability to own. In fact, my 16-year-old daughter, who refused to let me buy her any Bitcoin last year or 2 years ago, she just wanted no part of it, actually just pulled it up on the PayPal and bought, a few weeks ago. It was really, really easy. Now, you don't actually own your Bitcoin there. You own the Bitcoin price. But look, at the end of the day, I don't think she needs to, hold her own keys, right? It's fine. And it was only a few $100s, right? So it just depends.
And the decision tree for an institution and Bitcoin, how much does government regulation weigh in on that? Have you had discussions with institutions about that or the potential for new regulations?
Well, right now, we think the regulatory backdrop is pretty friendly in the US. The people at OCC and CFTC have quite a lot of experience with Bitcoin, I would say capital B, the whole concept of it. I think that they understand that this is a powerful new creative force, and they don't want to limit the growth in this world, but they don't need retail, getting blown out and losing tons of money. And It is still a very speculative world, especially outside of Bitcoin and Ethereum. But I don't think that there's any like regulation coming. People always ask, oh, will the government ban Bitcoin? Well, I don't really see why they would do that. I think Bitcoin and the entire digital asset ecosystem is potentially going to be a massive growth driver for our economy. I think it also has the ability to create, new jobs. I mean, if I'm a Democratic a legislator and I'm worried about unemployment rate at 6.5, and where are new jobs going to come from? Lots of jobs will probably disappear permanently. All of the companies in this space, and I mean all of them, are hiring people hand over fist. So it's just very small at the moment, but it's growing tremendously, and I think has the ability to be an important part of our economy.
Have you been following the GameStop episodes?
Well, a little bit. I mean, a little bit.
I was wondering, there's a lot of talk about the settlement cycles and the T+2 settlement cycles and how that needs to be shortened. And I keep thinking that with blockchain, perhaps that could just be instantaneous.
Yeah.
I don't know if that would, creates one example for that future digital economy, that economy that you're beginning to invest in.
Yeah, for sure. I mean, there are a few companies out there that, have the charge of, we will tokenize the world. And so, there is some world in the future where all $500 trillion of assets out there do get put on some blockchain somewhere, for the simple reason that everything then becomes fungible. And then once everything is sort of on a blockchain in a way, it does become transmissionable instantaneously. And at some point, the cost of doing that will drop dramatically. I mean, in many places, it's already dropped dramatically. I mean, on the Bitcoin network, you could send $100 million and it cost you, $5, and it would happen instantaneously. So you can't really do that in the old world. The GameStop thing, I'm not sure. I didn't follow it that closely. To me, it's just, it's just people playing games in markets. I'm not really focused on that, or the settlement aspect of that. But 100% you were right that the settlement at some point in the next 5 to 10 years, I think will be instantaneous.
So earlier you talked about when you finally started to buy Bitcoin after it fell like 85% a few years back and started to kind of walk into it. At prices now $40,000, $50,000, how should one think about getting started in Bitcoin? I'll tell you a little, not really story, but I think I did the same thing as you did. After I saw it fall back to about 8,000, then I started kind of wading into it a little bit. But now I'm like, okay, do I want to add to my position? How do I justify that?
I tell everybody the same thing here, and that is that do not try to market time Bitcoin. The way you should do it is you should decide how much you want to allocate. So let's say you want to do 5% of your overall portfolio, and then you put yourself on a program and you say, I'm going to buy 1% every 6 weeks for the next, X number of months. That's sort of how I would do it. Now, I think when it gets to 300,000-400,000, I think that's a little bit of a different proposition. Like, I'm not really sure. I'd like to see how things develop. But at 50, 30, 40, 50,000, you still have quite a bit of upside, I think, that's there. But remember, it's extremely volatile and it's extremely emotional. It's a new asset that's just sort of finding its place in the world. But remember this, okay? Only 1 to 2% of the world have exposure. It's very, very small. So if you're thinking about, you want to hold 10 years, 20 years, can this go to a very large number? Yeah, it can. Look, I think there are companies out there. I think I was reading something somewhere, about NYDIG coming out with some insurance products that would use Bitcoin as the base asset. Because as you know, historically, insurance companies have used bonds, right? But there's nothing there, there's no yield. And if you tie an insurance product to the price of Bitcoin, all of a sudden, there are a lot of possibilities. I think that'll be this year, next year, we'll start to see interesting products like that from people who are at the cutting edge.
So speaking of that, what's one long-term trend that you see playing out over the next year or several years?
Yeah, I mean, I think something very interesting that, institutions can play and people out there is this yield that is offered on digital dollars or digital euro. And this is the stable coin market. But you could buy Bitcoin, buy it through Kraken and then take your Bitcoin and lend it on the BlockFi platform and earn, 5, 6, 7%. And so I think that there's going to be an arb that the institutional guys are going to start doing, which is they're going to borrow from the legacy world at 1%. So you go to a bank, you borrow at 1 or 2 or 3%, you take those dollars, you go to the digital world, you set up a wallet, you buy some stable coin, you buy USDC, from Circle or, the Circle back, the dollar, or what there are a bunch of different stable coins. And then you take that stable coin, you deposit on BlockFi and you can earn that spread. Like, I think that yield, and I've heard people say that yield is the killer app for the digital asset ecosystem. I think, that's a very interesting trend that hasn't even started yet.
All right, we do a speed round called Trend or Fad. I'll mention a few different concepts and you can answer trend or fad.
Okay.
Ready? All right. Inflation, trend or fad?
Fad.
Peloton, trend or fad?
Trend.
Non-fungible tokens, trend or fad?
Trend.
Dogecoin, trend or fad?
Fad.
Dan, thank you very much for your time today. Really appreciate it. What's the best way for people to find you, connect with you, and learn more about what you're doing?
Yeah, well, we have, I am on Twitter, DTapCap. Also, 10T Holdings has a landing page, 10tfund.com. But I would say if you're really interested in this world, get yourself on Twitter and, there's a world of intelligence and a whole new world growing up there.
And thank you for tuning in to another episode of Trends with Benefits.